Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in and take a look, see what people are sharing. If you want to follow me, it's at Finance, and if you want finding-value.com, that's where I dive deeper into all of these topics, looking for potential investment opportunities. We still have a discount coupon code if you'd like to join Black Friday, one word. It's the last day to use that with the larger discount coupon code. After Friday, it is going to go to a less discount. So if you want to join and try it out, try the website and join the community. We've got a Discord channel. We've got midweek updates of what I'm looking at in the markets, and then I have question and answer sessions on the weekends. That's where the value is. You can ask whatever you like during a Zoom call to me, or send me questions before the Zoom call, and I can answer them during that. It is 50% off the first month only for a monthly membership, and you can get a larger discount going to the yearly membership if you want further savings. So Jacob King says, breaking, Tether has minted another 1 billion out of thin air and injected it into Bitcoin. If you're wondering why Bitcoin is above 100,000, it's entirely due to a massive price manipulation scheme that's happening quietly in the background. The largest fraud in history, according to this guy. This is all just a giant game of musical chairs. It's all fun and games until the music stops. That's that Bitcoin Tether relationship. And then what they do is later on, we'll go into this real quick, of they call it the circle jerk. We'll go into it. Here it is, the circle jerk. So this is the Bitcoin circle jerk. This is what I guess some people are speculating on. I do not know if this is accurate or not, but this is what people are sharing, and it's not just a few people, it's all over Twitter for the most part. It says the BTC circle jerk. So BTC funds Tether. Tether buys treasuries, so Tether has never been audited. And then, got Powell in the back there. It says, I cannot believe people think this has value. It will keep our Ponzi scheme going a while longer. And then what happens is Treasury borrows from the Fed. Treasuries fund the government. The US government is the largest holder of BTC. And then they do the circle jerk. They just go in circles here. So they're using Bitcoin as an excuse and its relationship with Tether to get people to continue to get into it and support Treasury borrowing from the government. That is what is proposed here. I don't know how legit it is. I don't know how accurate it really is. But this isn't the first time I've seen this. I've seen it from a lot of people who've looked into it. I don't know how accurate it is, so take it for whatever it's worth. I'm avoiding this whole thing, avoiding the whole thing. But it also supports, I just want to make a comment here. It also supports why Trump is a big crypto fan. It also supports why Powell will talk about crypto. And it also, if you guys ever notice, none of them talk about gold and silver. It's like hush hush. I think that we are getting potentially close to breaking this thing open. And what they're doing is they're using Bitcoin, which is an intangible asset. That's what people think it is. And then it basically funnels money into it. And since people are so emotionally driven and they don't know what bubbles look like, they just run in because they think they can get rich, which then provides the funds for the circle jerk to occur. Here is Haktua Girl. So this generally is what you see at tops of markets. Haktua Girl, aka Haley Welch, is facing backlash after she started a meme coin and lost everyone's money. The token hit 500 million before crashing below 60 million in just 20 minutes. Big volume in the beginning, and then it crashed on down. But again, that's a daily move. What do you expect? I mean, what are we doing here, guys? Like, why are we buying Haktua Girls meme coin? Like, who is buying this crap? What is going on? And it went to 500 million. That's like, I mean, that's pretty big if you think about it. This girl with Haktua got 500 million market cap. Think about that for a second. Just think about that. How Bitcoin is not a store of value, it's too volatile. Reality is, so this is what Zero Hedge is writing about. Bitcoin is not only the best performing asset in history, and certainly in 2024 it has a higher Sharpe ratio, risk adjusted return than the S&P treasuries and gold. You know what else had one of the best returns with very low volatility? Madoff did. Madoff. I had to post this. So Madoff tops the charts. Skeptics ask how. I just want to read this, but it's safe bet that relatively few Wall Street professionals are aware that Madoff Securities could be categorized as perhaps the best risk-adjusted hedge fund portfolio manager for the last dozen years. It's 6-7 billion in assets under management provided primarily by 3 feeder funds. Currently would put it in the number 1 or 2 spot in the Zurich, formerly MAR database of more than 1,100 hedge funds, and would place it at a near the top of any well-known database in existence defined by assets. That's just how good it was for Madoff, which we found out later. This is before they found out it was a Ponzi scheme. But it just so happens that Bitcoin is also beating most everything in terms of total return and risk adjusted returns. Sounds familiar to Madoff. I don't know. We'll see. Here's Nostra. It says, I guess we're all going to live in digital houses, drive digital cars, and eat digital food. I'm sorry, guys. I just find it really weird how everyone is just piling into this. Um, I was talking to someone, and he was pretty big in crypto some years ago. He's completely out of it now, but he made a comment that people who are not very financial, savvy, like they basically don't follow finances at all. They're starting to text him like, "Hey, I bought some Bitcoin, guys. This is what a bubble looks like. This is what it looks like, feels like, and it can still go up. I'm not saying it can't go up, but when the retail sector's in here and Haktua is releasing meme coins, yeah, yeah, we're there." Eric Yoon, so he says Trump said BTC is the new oil. This is a signal for USD revaluation. Excess liquidity is being funneled or will be funneled into Bitcoin so that more USD liquidity flows into Tether to buy more US treasuries, the circle jerk. This on top of Luxembourg and the Cayman Islands, US proxies buying USTs. Yep. Just a friendly reminder, just because you have reserves in the ground, that does not mean you have the means to dig them up. We can take Venezuela, for example, that literally has the largest oil reserves in the world, yet their oil production is under 800,000 barrels per day. A lot of people, they counter me, so I'll say something on the lines like, I think in a few years, oil is going to get real tight from a supply demand perspective. So we're going to run deficits, inventories are going to draw down, we're going to get to critical levels, we're going to eat through spare capacity of the world, and we're going to get tight. And then people will say, well, look at all the reserves. Look at all these reserves. Look at all these reserves. Reserves do not equal flow rate. Not all reserves are equal. Some are incredibly hard to get out. Some are very easy. And then we've got, technology and all that stuff to get it out, but not everybody has the latest and greatest technology in the world, aka Venezuela for this example here. So reserves are not flow, number one, and I am stating that there's going to be a problem potentially with flow rates. And there will be reserves in the ground that we never produce. because they're too expensive, too difficult to get at. Now, those reserves may or may not be on the books. So some of the reserves you put on the books based off of current practices and current technologies. Then you've got reserves that might become reserves in the future if the price continues to go higher. Now, Peter Schiff, it says CNBC's Jim Cramer just proclaimed Bitcoin can't lose investment. He said buying it is a no-brainer and compared it to trading on insider information. These seem like the type of statements typically made at market tops. He's completely right. Be careful, guys. Be careful. Your risk reward is total junk at the top. So we're at total junk for risk reward there. And again, BTC funnels USD liquidity into Tether, Tether by USTs. That's what we're getting at. Freight futures, AM update. So dry bulk, Capesize up 5%, Panamax up 2%. Tankers down and flat for basically a flat day for tankers. Gordon Johnson says, why value-based analysts who base their views on the real economy, a company's ability to generate cash, have for the most part been wrong since January 2023. In one picture, what's driving this is the Federal Reserve's and SEC Yellen's reckless intervention in markets since 2020. I think they're in the market messing with it right now. That's my opinion. When we had a shoulder, head, shoulder here, that was a top. And I thought, for me, I thought we were going to come down and get a little bit closer to truck tonnage index down here. But somehow we reversed it and went on up. That's also at the same time that they started printing more money, that the M2 money supply started going up. So it was more liquidity coming into the system in October of 2022, which is this low right there. Just by coincidence, it all started going up again. We're starting to get these rising wedges all over the place, but it continues to go higher. They need the money to stay over there because if it starts to rotate into the assets like gold, silver, oil, and commodities, then you're going to see massive inflation. The money's been printed, the money's in the system. Now they can't stop this. They cannot let the rotation occur. Otherwise, we're gonna all see where this money is in the system. How data center growth could look like over the next 5 years. So AI data centers have a near insatiable demand for power. We had a big CAGR, so this is compounded annual growth rate, 13%, 12%, 10%, and now we're going about 9%, all the way up into 2030. We've got, in my opinion, a lot of growth for electricity. That growth will be met by natural gas in most areas and maybe even coal in other areas. And this is spending on data centers is expected to double in the next 5 years. Huge spending. Here's my post. The reset of positioning for SILJ versus SIL. While SIL breaks out, SILJ will probably outperform in the future. SILJ just behind SIL. So this is SILJ divided by SIL. We can see that it's moving lower. Generally what occurs is when a sector is about to move, people position into the larger names before the smaller names. We can see this occurred here in 2019 into the early 2020s. They printed all that money, and then we had a big boom in SILJ going back up again. We're getting that same slingshot move lower here, where SIL is outperforming SILJ. So let's go look to see if we've got positive breakouts in SIL. Here's SIL, which is the larger silver companies. They're breaking out of this downtrend right now. This looks fantastic. And if we want to talk about silver companies, we've already positioned in them already when it was down here in the bottomish area. And we're riding it. But that looks good. So when we look at SILJ, SILJ is just an earlier, SILJ is like where my pointer is here. SILJ is just earlier and we're still going to break out. And this is going to be a basing pattern that will break eventually. And then we're going to launch it. Let's launch this thing. And we're at a very cheap location for all of these in relationship to gold and silver. In fact, yeah, we're very cheap. Looks very, very good. In fact, let's pull it up real quick. Let's pull up SILJ versus silver itself. So SILJ divided by silver, and this is what we've got there. So we've got basically a downtrend line that's broken to the upside, and then we've come on back to do a retest. That is like the perfect spot to be looking. And I should probably put more money in this thing. God, that looks good, and I really should accumulate some more silver companies. And obviously midweek update that I released on Wednesday has some of the silver companies I like. You guys wanna sign up and look? That's the ones I like. Current Fed Chair Jerome Powell said Bitcoin's like gold. Former Fed Chair Alan Greenspan said Bitcoin's nothing like gold. He stated that Bitcoin is not a viable substitute for gold as it lacks intrinsic value and its appeal relies exclusively on the greater fool theory. Well, that's some more opinions there. WTI crude oil 20-year seasonal today happens more often that it doesn't in 20 years. So we're right there at the low points basically in December here. We're getting close to a bottom. It's funny, we've got a lot of charts that look exactly like that. A whole bunch of this. If you see how this is this correction here, so you get a big move up, you get a correction. This is the A, B, C correction. We're getting this in a whole bunch of stuff right now. And I would be trying to buy it down here. And then you get an inverted shoulder, head, shoulder. That's your inverted. And then we start moving on up, 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 up. Then big moves up. That's crude oil future seasonality. Getting real close here to the bottom. I have over 1 million in equity in a house just sitting there trapped with a 2.875% mortgage. I I'm not trapped. I don't really care. If equity builds in my house, so be it. It doesn't matter to me. Just doesn't matter. I live in the house. I need to live somewhere, and that money is kind of like I look at it as a deposit to get a fixed mortgage. And then a fixed mortgage in a highly inflationary environment, I'll take that all day. Now my mortgage is 2.75. That's what I've got. And I just don't care. Like I really, really don't care. Some of these guys, they try to suck out all the equity of their house and buy more homes or buy whatever. Like I'm not interested in leveraging up, guys. I don't need to to get like I don't need to have $100 million. I don't need that. It would be nice. Yeah, sure, great. But at some point, like your life doesn't get any better. Like you kind of max it out. And then the gap to the next, I'll say the next level, I mean, it's a big gap. Living in a modest house with modest things where you don't have to work is pretty much like living like a king. And to get a little bit bigger house, that doesn't really matter. But to make that jump where I mean, you're getting catered around and you've got your own airplane and like the world is now catering to you, that's a big jump. That's not a couple $1 million. That's that's going from tens of millions to hundreds of millions, maybe even billions. I'm not going to go over that. We've got enough over Bitcoin. The S&P 500 price to book basically at the 2000 levels. The price to book, and I think we're just doing a repeat here where we're in a tech bubble. And whenever this thing peaks, I can't tell you exactly when or what it looks like, but I think we're getting close. Then it'll roll over and commodities will outperform. That's the cycle. Commodities are cheap against the S&P 500. You can obviously see that the price to book is expensive in relationship to history, and these cycles just go over and over. At the end of these cycles, you're going to see retail sector jump into them. So they'll be buying Nvidia, they'll be buying whatever AI stock, and then they'll be buying crypto. And I think crypto is just an extension of the bubble. And that's where I think it will all end poorly when we go into different market conditions of what I think is coming. Here's Grady, and this is more information about that rotation occurring and where we're at in that rotation. So he says this ratio chart talks about global capital flows changing and a historical sector rotation in the making. The chart shows that gold miners turned up versus the leading tech sector already 8 months ago. Then it broke out in August. Catching huge sector rotations early is one piece of the puzzle to making the really big gains. The largest percentage gains are always from the very lows. Profit is made when you buy. Most play the market with their emotions. They react to everything, plus have no strategy or trading investing rules. They do the same thing over and over without changing. To succeed in trading, it is vital not to participate in this emotional roller coaster, but make use of it instead. And when the bull resumes, like gold and silver now has done, it is vital to change mindset. One cannot play a bull with a bearish mindset. If you doubt the bull, you will not be able to change mindset, which means you will not be able to make good use of the bull market. You have to believe in the bull market, and you end up being a victim of the wall of worry, i.e., your own emotions. And most do need help with this emotional roller coaster. So this is the Huey breaking out against the SOXX, which is the semiconductors, and we can see the breakout. Untouched black arrow added at the very lows. This gapped above blue line in August equals a breakout. 17-year perfect bullish falling wedge saying historical global sector rotation and change of capital flows is in the making. And what I think a lot of people don't understand is that this stuff takes time. We're talking about huge patterns. We're talking about big moves that take some time. I know people want to get rich quick. I get it. I want to get rich quick too. But this is where the big, big, big money is made by taking early positions, riding them on up, and just sitting in them and not doing anything. It's coming. Here's the state of the oil market by Eric. He says global oil demand is at all-time high. Global oil inventories are at an all-time seasonal low. U.S. shale is growing at its slowest pace since its rise, other than during COVID or the Saudi spanking of 2016, and is clearly in its twilight. OPEC plus cohesion is strong and evidenced by UAE concession, and they just proved that they will not push barrels onto the market. Instead, they're waiting for the market conditions to allow them to be pulled into the market. Everyone is bearish due to 2025 non-OPEC growth projections. Yet Brazil just disappointed by 350,000 barrels per day this year, 30% of 2025 growth expectations. US 25 estimates are too high as well. After next year, non-OPEC supply growth will be less than global demand growth forever and will effectively stop growing in 2028. OPEC spare capacity is likely only around 4 million barrels per day in a 104 million barrel per day market and is largely held by one sophisticated actor who can and is playing the long game. Trump becomes president in 1.5 months, and his maximum pressure campaign could lower Iranian exports by 1.4 million barrels per day using existing sanctions whose effectiveness, when actually enforced, is proven. Net speculative length remains low. Remind me again, why is oil heading to $40 a barrel, and why is everyone so extremely bearish? That's the sentiment at this time. But the fundamentals look pretty good. I agree, Eric. It's just short-term sentiment. Finance guy, the inevitable collapse of Bitcoin will be a financial disaster for so many people. Don't be the last person at the table waiting to sell. His opinion. Large public home builder quarterly market share. So one of the core themes for housing this cycle is big home builders getting bigger. While true, two home builders, D.R. Horton and Lennar Corp, are really the rocket fuel behind overall big builder market share gains in recent years. There's these two up there, and there's everyone else. But they are heading a little bit higher here since 2020. Banks sold. So there's a bank that sold over 270 million of U.S. oil futures ahead of OPEC Plus meeting. Source says, and then they sold. That's that big down day that we saw here recently. And that's all I've got for today, guys. So thumb up for the content. Subscribe to the channel. Subscribe to the website. And that's all I've got. So we'll catch you next time. This is Finding Value.